Last Thursday, Walgreens reported a solid quarter, but new CEO Tim Wentworth also slashed the dividend by almost 50% because he believes there are better ways to spend that money. Is he right? Earlier today, we spoke with the new CEO of Walgreens Boots Alliance. Take a look. Tim, why did you take this job? You're calling it a once-in-a-lifetime opportunity. You had to cut the dividend. People were all worried about Walgreens. You got off the couch to do this?
Absolutely, Jim. I got off the couch, and when I got the call, I immediately asked my wife and my daughters, what do you think about me going back to work, but more importantly, back to work to Walgreens? And they said, you've got to take the job. Like, there wasn't even a hesitation or a beat, which I expected there would be, and it's because this brand, 123-year-old company, building trust with consumers, touch points in healthcare, and importantly, we all learned how important this company is during the pandemic, when literally our lives are given back to us because of a vaccine that Walgreens and others mobilized to produce an outlet for, where we could go and get back to our lives. And so we saw what a great company this was with those touch points, and I said, I want to go and build off of that platform.
Now, I think people need to know your background, Express. You did pretty well for people, Express Scripts, didn't you?
We did a terrific deal for Express Scripts shareholders, employees, and Cigna, because if you look, we merged with Cigna. I stayed for 3 years afterwards because I so believed in that combination, and it performed, and it continues to perform. So we did a good thing for our shareholders. We found a home for Express Scripts that was really, really compatible, and it's been a terrific merger ever since.
Well, the reason I mention this is because Walgreens had a series of CEOs that really weren't that much involved with the healthcare system.
Sure.
And we're far more worried about the chewing gum greeting card side, which frankly does not intrigue a lot of people. You are from healthcare. Can you make your company more of a healthcare company?
There's no question. First of all, we are more of a healthcare company today than people actually appreciate, because it's all sort of been in the narrative, kind of a question of we're pivoting to healthcare, away from the stores. The answer is actually, if you look at the stores and what goes on, 8 million vaccines this year at the back of the store already. That's a healthcare business, right? That's not just putting pills in bottles. That's people touching people. 85,000 of our people touching people every day, 10 million people that walk in our store. And so from my perspective, we are in healthcare today. As I look forward, the place that I'm super intrigued to leverage this platform is health services, is taking those engagement touch points that we have and the trust that our brand has. When a Walgreens pharmacist calls you and says, hey, your health plan would cover a shot for you, would you like to come into the store, we can give it to you? You are 4 to 5 times more likely to respond to that than if someone from the insurance company calls you and tells you the same thing. That's valuable if you're a Medicare Advantage plan, for example. That's one little example of the way that we can leverage the platform and the trust to meaningfully help others that are in the ecosystem achieve their goals.
Well, this is classic. We're here to, I'm talking about the GLP-1, the obesity drugs. Well, I mean, sure. I'm not hearing people playing a role at Walgreens, but that's probably wrong. This could be your sweet spot.
Absolutely. And again, that's an example of a product where we see now, and I'm sure the pharma companies that have innovated those products see, very difficult to keep those patients on those products over a long period of time. They only work if you stay on them, generally speaking. There's additional coaching, side effect management, and so forth, all of which we are well positioned to help those patients with on behalf of those pharma companies. Now, those drugs are also a great example, though, of how ultimately the reimbursement model is going to have to evolve. Because the old reimbursement model of letting us all make money on generics while the brands get subsidized is no longer going to work. So that's a great example, though, where being paid for our services, independent from actually filling the scripts, is a key part of how we're going to be reimbursed in the future and create value, again, for patients, for pharma, the health plans that actually are paying bills, all of them aligned around that outcome.
Well, you mentioned that the pharmacist is going to play a more important role, but you've been doing everything just to find pharmacists. Maybe you have too many stores. Maybe you can get some pharmacists from Rite Aid as they liquidate stores.
Well, there's no question that the store footprint that we have is an important asset, but it's one that we are, as I say, I've been saying, everything's on the table. We know that this year, we're closing 200 stores, right? And that's a good start to making sure we've got the right optimized footprint. If we have 2 Walgreens that we can collapse into one based on geography, traffic patterns, and the future of our healthcare business, then we're going to look at those kind of things. But let me also say, we announced that we've started in March this coming year, we're going to have this year, we're going to have a Dean's Council for Pharmacy to essentially chart and lay out with 17 deans of pharmacy, one from each of our operating areas, a meaningful, iterative reinvention and evolution of community pharmacy workplace. And our pharmacists are so excited about the fact that we've announced that, because what we've said is, listen, we don't think this is the way it's going to be. We've learned with vaccines and other things, got to step back, train young pharmacists different, encourage them to come into community pharmacy. We will be the employer of choice for that.
All right, let's talk about the stock. Now, you cut the dividend last week. A lot of people feel, well, wait a second, maybe your balance sheet is stretched, but you own Boots Alliance. There's a lot of optionality there. You own Village MD. You can be able to maybe offload some of that. And most importantly, you bought stock. I mean, you wouldn't buy. So I know you wouldn't have bought stock if you think it's the wrong level. You'd wait.
I mean, I was very happy on Friday when I was cleared to be able to buy a bunch of stock for. I think the announcement went out today. Yeah, I'm a believer, and we as a company believe, and our employees believe. But I think it was an important signal. But it was also, frankly, a smart investment. I was thrilled. I know what the value of this company is going to be, in my heart, and so I needed to show it with my wallet, and I did.
I think people need to realize that there are many things you can do. You can do drug tests for people. You can actually be a lab for people. And that's because the iconic brand that is Walgreens still seems to have a lot of pull. How many people go to Walgreens every day?
Yeah, somewhere between 8 and 10 million every day. Every day.
So who else has that? Who sees that many people? Who else could help pharma try to get in touch with people?
Right. I can't think of anybody that is better positioned than Walgreens.
Well, hold on. Can Amazon? How many people do they touch every day?
They don't touch directly anybody every day, which is, listen, Amazon is amazing what they've built, right?
They've taken the front store,
them, right? But they don't have 85,000 people touching people every day at the back of a store, building trust in communities. And I can tell you that trust is going to be the leverageable asset that we have as we look to build health services that drive engagement for outcomes for others.
And even though people said, well, wait a second, how are they really doing if they cut the dividend? You are saying that it is still an iconic brand.
It's still an iconic, but by the way, it still pays a darn good dividend. We're still top half of the league table in terms of dividend payments. Our shareholders are still being well paid, but my goal is that we drive the share price up by doing shareholder value creation.
But there are a lot of people who say, wait a second, 110 basis points on theft, that we should be focused on the fact that when you go to a Walgreens, people are questioning whether you need to pay. I've seen people stealing all the time from my Walgreens.
Yeah, it's unfortunate, and we certainly have stores that are in some areas where the cost of keeping those stores open is difficult, and it's something we continue to look at. We work with our industry, we work with legislators, we're working with our trade association as a leader, because that is a problem. I mean, look at it. We're sitting in a city where one of the great department stores of our time had to close down. It was an iconic location, so we know what the problem is. But you know what? Solving hard problems is how you truly create shareholder value, and this is a problem that we will work our way through.
I know you've solved a lot of problems and made a lot of money for people, which is why I am so excited that you are at Walgreens. That's Tim Wentworth. He's Walgreens Boots Alliance CEO. Hey, congratulations on your job.
Thanks, man.
Good to see you back.
Coming up, did this healthcare giant hit a home run in weight loss? Or will a recent acquisition be a Swiss miss? Cramer has more. Next.